Hey, this is Tad, mortgage agent in Toronto, and this is a pre-approval budget video. This is an example of the budgets I do for my clients based on their situation after reviewing their documents. So here's the situation for this video. There's one borrower and they've been pre-approved for a max purchase price of $600,000. They're a first-time home buyer. The total budget they have for both the down payment and closing costs is $60,000. They're looking to get a condo in Toronto, and they want to get a mortgage with a 3-year fixed term. Now we're going to show the borrower 4 different options, 2 at their max pre-approved amount and 2 at lower amounts. Now we're going to start at the top here, work our way down, and I'm going to explain each point as we go. First off, the amortization. This is going to be the total amount of time the borrower has to repay the loan. In this case, because they're looking to get a high ratio mortgage, that max amount will be 25 years. Next is the interest rate. So this is what their interest rate would be for the length of that term. This is just an estimate based on the current market, and it can change at any time. Once the borrowers find a property they like and puts an offer on it, then I'll find them the lender with the best mortgage and lowest interest rate for the situation at that time. Next, the first-time homebuyer status. Like we mentioned, the borrower is a first-time homebuyer. This means they should be able to qualify for a rebate on their land transfer tax. Next, the property taxes. So this is just an estimate after looking at properties in Toronto for condos in the $600,000 range. And to finish off, we get to the property location. Like we mentioned in the details, they are looking to buy in Toronto. This means they're going to have to pay an additional land transfer tax. And I'll explain more about this later on. Now we get to the mortgage breakdown. First off, the purchase price. We have 2 purchase price options at the borrower's max. Then we have one at $575 and one at $550. This is to give the borrower a range of different purchase price amounts so they have an idea of what their costs might be if they bought something a bit less. Now we get to the down payment. First off, the minimum down payment required to buy the property at the max purchase price. Then we have the maximum down payment the borrowers can put on their max purchase price while still staying within their budget of $60,000. And that goes for the same for the last 2 options, where we have the maximum down payment the borrowers would be able to put while still staying within their budget of $60,000. Okay, to finish off this section, we're going to talk about this mortgage insurance premium. What is this? Well, when a borrower is getting a high ratio mortgage, the lender will purchase mortgage loan insurance and pass the cost on to the borrower. The cost of this insurance is called the premium, and the amount will vary depending on the size of the down payment. The lower the down payment, the higher the premium. Now we get to the total mortgage amount. So, how are we getting these numbers here? Well, this is related to the mortgage insurance premium. There are 2 ways to pay it off. Option 1, the borrowers can pay it off in a lump sum, or option 2, which is what we're going to do here, is we're going to take that premium amount, add it to the loan, which is going to increase the total mortgage. So for that calculation, it'll be purchase price minus the down payment plus the premium equals total mortgage amount. And that's going to be the same calculation for all 4 scenarios here. Now we get to the closing costs. First off, we have our down payments, just like we had above. We have an estimate of legal fees, tax on those legal fees, an estimate of an appraisal. Now we get to the land transfer tax. Like I mentioned earlier, because the borrower is looking to buy in Toronto, they're going to have to pay an additional land transfer tax. What does this mean? Well, when you're buying anywhere in Ontario, you have to pay the provincial land transfer tax. And when you're buying specifically in Toronto, you have to pay an additional municipal land transfer tax. But there's good news for this borrower. Because they're a first-time home buyer, they should be able to qualify for a rebate on their land transfer tax from both the province and the city. And this is what their tax would be with those rebates already applied. Now we move on to the tax on the mortgage insurance premium, which is a tax on these guys here. And to finish off, we have a buffer of $1,000 just in case some costs are higher than expected. So that leads us to the borrower's total closing costs of these amounts here, all within their budget of $60,000. All right, now we're almost at the end with the household budget breakdown. In this case, it's just going to be the monthly mortgage payment, condo fees, and property taxes. First up, we have the monthly mortgage payments, which is going to be calculated based on the term length, amortization, interest rate, and total mortgage amounts. Now we have the condo fees, which is just an estimate after looking at condos in the $600,000 range in Toronto. and we have the monthly property taxes, which is just this $2,500 divided by 12. Adding those three together, we have the borrower's total home expenses of these amounts here. All right, so that's it for the budget. Now we're going to send this to the borrower. Once they review the video and they know what their max pre-approved amount is, they can connect with the realtor and go looking at homes. For any properties that they like, I'll create custom budgets specific to each property with a different range of purchase price amounts and down payments so they have an idea of what their costs might be if they choose to buy that property. All right, so that's it for the video. Thanks for watching, and if you have any questions, feel free to reach out. Take care.